When golden opportunities are presented in the stock market, investors need to act fast and jump on these rare chances before it's too late. Realty Income, ticker symbol O, is one of the highest quality REITs in existence, at least in my opinion. And I think it's on a fire sale right now due to interest rates being sky high, a recent earnings report that has some investors scared, and of course other external factors. But in this video, we're going to dig deep into this high quality real estate investment trust and see exactly why I think investors that buy into Realty Income today at these prices could be very, very happy and rich later on down the line. Now stay tuned, because if you are a dividend growth investor, you are not going to want to miss a thing. And before we get into it, make sure to please drop a like on this video and subscribe for more content like this. Very quickly, for those that aren't as familiar with Realty Income got its start in 1969 with a single investment in a Taco Bell. And now today, this REIT owns thousands of properties across America that are leased to hundreds of tenants operating in dozens of industries. Retail properties account for most of Realty Income's rental revenue, with industrial warehouses generating some of the additional. Now, all of Realty Income's properties are under a long-term triple net lease agreement, which means that the tenants pay for things like maintenance, utilities, and even taxes. Now, impressively, Realty Income has paid uninterrupted dividends since the firm's founding and has increased dividends each year since going public in 1994. But stay tuned, because we are going to look closer into the dividends in a little bit. To look a little bit deeper into Realty Income, going on the website, they have over 13,100 commercial properties under the net lease agreements, a 99% portfolio occupancy, which means basically, for the most part, every single one of their properties are being leased right now. Over 1,300 different cities in 85 different industries. This is a high quality REIT that is heavily diversified. Now, what's also crazy about Realty Income is that a lot of us actually step foot in Realty Income's properties a lot more than we probably even realize. Realty Income leases to companies like Dollar General, Walgreens, Dollar Tree, 7-Eleven, Wynn Resorts, FedEx, LA Fitness, and many, many more, just to name a few. Now, this right here is maybe one of the most bullish aspects of Realty Income, in my opinion. It's the fact that the property diversification type is made up of mostly retail. Now, especially knowing the type of tenants that Realty Income leases to. These are tenants, these are businesses that are going to be around whether the economy is good, whether it's bad. It doesn't get much better than leasing out your properties to recession-proof businesses. So I know what you might be asking now: why do I think that Realty Income could be at a once-in-a-decade buying opportunity? Well, first of all, year-to-date, Realty Income is down quite a bit, down 7.18%. And this is during the same time that the NASDAQ is up over 40% year-to-date. Now, of course, one of the main reasons on why most of the real estate industry is under some pain right now is, of course, because the Fed has been raising interest rates for well over a year now, with interest rates over 5% compared to the 2 or 3% that we saw just a few years back. This is, of course, putting a lot of pressure on real estate investment trusts, because once again, they do utilize a lot of debt to buy properties, and of course, the higher interest rates are, the more expensive the debt is to obtain. But zooming out to the max chart and seeing how Realty Income has traded as far as historically speaking, since the mid-1990s, Realty Income is up over 638% just as far as share price. This does not include dividends, this is just as far as share price. So any time in history, if you would have bought a Realty Income and held long enough, besides maybe a few instances, for the most part, you should be in the green by quite a bit at this point. On top of that, Realty Income was trading at over $75 a share just a matter of a few years ago. So in a situation where interest rates start to get paused and then cut from there, again, this is all speaking for a longer term investor. Real estate will once again be able to borrow money for much, much cheaper in theory than they're able to borrow it today, and the real estate industry itself should be back off into the races. But putting Realty Income's share price to the side for just 1 minute, looking into Realty Income's dividend, the forward dividend offered at this current price that Realty Income is trading at is at 5.21%. And I personally have been buying shares of Realty Income for well over 5 years now. And one thing's for certain, whenever Realty Income's dividend yield is being offered at a forward yield of over 5%, a few things that I've seen are for certain. That high of a dividend yield doesn't normally last that long. And on top of that, I always seem to load up on more and more shares whenever it gets to this point. Digging a little bit deeper into Realty Income's dividend, the current dividend payout is around 26 cents per month, and that's for one share of Realty Income. And keep in mind, just a few years back, Realty Income was only paying around 22 or 23 cents per share per month. This real estate investment trust continues to raise their dividend consistently year after year. And for me personally, now owning close to 2,000 shares of Realty Income, the more and more I accumulate, the more and more, of course, I get paid on a monthly basis. So for me personally, even if Realty Income trades sideways for a while and allows me to accumulate more and more shares, I will be more than happy to get paid an over 5% starting dividend yield with future dividend growth on top of that. With all of that, Simply Safe Dividend also has recently upgraded Realty Income from a 70 safe to an 80 safe, and this was upgraded around 5 months or so ago. They said Realty Income has paid uninterrupted dividends for over 50 years and has achieved a dividend aristocrat status with nearly 30 years of annual dividend growth. The diversified REIT owns thousands of properties spread across the U.S. in prime locations and has achieved stellar occupancy rates that have never dipped below 96% even during the financial crisis. Most of them are A- rated property tenants and have serviced non-discretionary or low-point elements to their business, which is what I was saying earlier. A lot of these companies that Realty Income leases to are very recession-proof. They then said this diversified and stable strategy has helped this REIT generate steady earnings growth and has led to a decade-low payout ratio that suggests a reliable payout. Now, it wouldn't be fair unless we dug into Realty Income's most recent earnings and got some forward clarity on where the company or where the management thinks the company is going to go from here. This post says Realty Income announces operating results for the 3 and 6 months ended June 30th, 2023. So some of the company highlights, these are very important. Net income available to common stockholders was $195.4 million or around 29 cents per share. Normalized funds from operations available to common stockholders was $688.3 million or $1.02 per share. Now, adjusted funds from operations available to common stockholders was $671.7 million or $1 per share. Realty Income invested $3.1 billion in 710 properties and properties under development or expansion at an initial weighted average cash lease yield of 6.9%, which is very good. Raised an additional $2.2 billion from the sale of common stock, primarily through our at-the-market or ATM program with a weighted average price of $61.89. Issued $400 million of 4.7% senior unsecured notes due December 2028 and $600 million at 4.9%. Realty Income's net debt to annualized pro forma adjusted EBITDA was 5.3x. Also completed the previously announced sale leaseback transaction with EG Group of 414 single-tenant convenience store properties for $1.5 billion. Now, the CFO recently also said, "I am pleased with the results our team delivered in the second quarter," said Summit Roy, Realty Income's president and chief executive officer. "Our performance continues to be driven by our diverse and high-quality portfolio of leading clients. Our global pipeline of investment opportunities with favorable risk-adjusted return profiles remain active. During the quarter, we closed $3.1 billion of investment volume, and we continue to elevate and expand into new geographies. Our investment efforts are supported by our well-capitalized balance sheet, which was further bolstered through a successful debt debut Euro bond offering in July. In addition, we currently expect over $650 million of net proceeds from unsettled forward sales of our common stock to support our near-term growth initiatives. Given our current liquidity position and healthy investment pipeline, we are increasing our acquisition guidance to over $7 billion. Also very important, combined with our well-performing real estate portfolio, we finished the quarter with a 99% occupancy rate, and our business remains positioned to offer investors consistent cash flows and compelling risk-adjusted returns. So for the more long-term dividend growth investors that do have a long time horizon ahead of them, buying Realty Income under $60, in my humble opinion, and what I've been doing, is an absolute gift. But I want to hear what you guys think down below when it comes to Realty Income and the future of this REIT. Do you think long-term Realty Income is going to be a good investment from here, or is this a single stock that you'd rather stay away from? If you enjoyed this video, make sure to please drop a like on it and subscribe for more content like this. Thanks for stopping by, guys, and I'll see you in the next one.